No. Okay, please have a seat so that we may proceed with the conference. I'd like to begin by thanking and showing our gratitude and utmost appreciation to our sponsors today, beginning with Invest, our main sponsor, followed by Montel, our technology sponsor, United Securities, our participating sponsor, Muscat Clearing and Depository, our supporting sponsor, strategic sponsors Bank Muscat, Suhar International, HSBC, NBO, Bank Dhafar, and our media sponsors Al Wisal and Al Shabiba. We will now be hearing from our discussion speakers, starting with Mr. Sanjay Kawatra, who is the COO of Invest, which are our main sponsors today. Please welcome Mr. Sanjay Kawatra to the stage.
Am I audible at the last? Okay, thank you. Your Excellencies, ladies and gentlemen, distinguished guests, a very good morning. Salam alaikum to all of you. I will start with, first of all, thanking MSX for organizing such an important event. I think it's really, really very well done, is in terms of the real commercial element of the way we are seeing the things which are coming up. Prior to me, we have heard, very good speakers talking about what's happening within Oman. The reforms introduced by the government, the fiscal consolidation, the way these things are happening, the new initiatives which have been introduced, and a very future, the outlook, a bright future outlook for the country. I think this is the time for the foreign investors to look at Oman and then take advantage of this price dislocation, which is still there. It's not going to stay for long because we are seeing a very good correction, happening as we are progressing on all the things. So again, thank you very much, MSX, for doing this such an important event and inviting us as Ominvest to participate in this. First thing first, just few logistics. It's basically, we have 45 minutes to present, but we are running a little bit behind the schedule, so we'll try to finish it up as soon as possible. Our team at Ominvest will be here today and tomorrow. On the last slide, I'm going to leave the coordinates, where we can organize one-to-one meetings, if we want to know more about Ominvest, to explore business opportunities, as well as there will be a Zoom code which will open after my session, and our investment relationship team will be sitting there, and we'll be more than happy to engage, even with the people who are connecting virtually with us here. Just again, from the rules, the ground rules on this, this is more of an informative session, for us to make you familiar with Ominvest. This is not a solicitation or an advice for you to or anybody to buy or sell any securities. Some of the statements might be forward-looking, which are based on the data and assumptions of the management team, which may depend going forward on the market conditions. So just I request everybody to have a look at the disclaimer which we have, and then we'll just move into the presentation. What are we going to discuss today is briefly about Ominvest, who we are, provide you an overall glance on the Ominvest, the business verticals, the way we operate our business, the strategic direction, which we have embarked on. We will provide you an overview of our select portfolio companies, as well as what's keeping us busy during 2022 and how we are looking at the future. We will finish with certain performance indicators, and cash is king for everybody, so we'll briefly touch on about our liquidity management. Just to come on Ominvest, Ominvest was established in 1983. We are going to turn 40 next year. It's one of the highly successful and largest listed investment company in the region. As I said, founded in 1983. The company has a track record of consistently being profitable and an uninterrupted dividend payout to our valued investors. We have a diverse set of investors, more than 2,000 in number, and it varies from very reputed family businesses, institutions, sovereign wealth fund, pension funds, corporate institutions, as well as several retail investors. The company owns high quality durable assets in diversified sectors and producing cash flows. And I'll touch more on the cash flows and the liquidity management, why it's important for us as an investment company. Our total assets are at 2.5 billion, covering diverse sector and geographies. When we talk about sectors, we are in banking, we are in insurance, private equities, and investment banking. We have non-banking financing companies within our portfolio, as well as we have niche real estate assets with us. And then we'll talk more about the portfolio and our select companies as we progress. In terms of the geographies, it's a journey. We are predominantly in Oman, but we have a very strong presence in UAE, Bahrain, Kuwait. We have done a new transaction, and I'll touch on this. We have a presence now in Saudi Arabia. When we go out of the region, it's Southeast Asia. We have our offices in Singapore. We have an office within the region in DIFC as well. Some of our investments are in Vietnam, South Korea, as well as certain assets in USA, and this continues in terms of our diversification journey. Major portfolio companies which we have are the market leaders. If I just give you a few examples, we have a sizable stake in Bank Muscat. That's a market leader in Oman. and there is a presentation today by Bank Muscat. We have National Life and General Insurance as our flagship insurance company. Again, market leader in Oman, but also has a very strong presence now within the region. We have an investment in National Finance Company. It's again the leading non-banking financing company within Oman with a market share of almost around 47%. And then we have an investment in U Capital, Obar Capital, which is a fully regulated investment firm. Again, in terms of the market share, they are the largest in the country. So just to give you a perspective of our portfolio, the company is led by a progressive board and a capable management team. It's basically, it all goes down to the people, the team, for which we are all proud of. And I'll share some insight on our board as well as the management team, and overall dedicated to enhancing value for all the shareholders. If you look at some of the KPIs or some more information on this is 2.5 billion of our assets. It's very well allocated. It's a very balanced portfolio, which provides us sustainability as well as growth opportunities, for us to capture on as we progress. Consistently profitable. Our CAGR is at 14% since inception. Uninterrupted dividend payouts, again, it has grown by almost around 14% since inception. And as I mentioned, there is still a price dislocation. When we look at Oman compared to other region, the dividend yield was almost around average for the last 3 years is in excess of 8%. 79 to 80% of our assets are actually in listed entities. And that's very important because these listed entities have got their own set of high standard of governance, and which becomes very important when you are making an investment in a company. But again, it's balanced. We have other investments as well. Our last year return on equity was 13.1%. We are very active in our portfolio turnover as well, and I think that's what you can see. These are the numbers since 2020. So what we have done since we all had COVID, and now we are lucky that we are sitting in such a seminar, after all these COVID protocols have been listed. But during this period, what we have done, we had profitable exits of around 420 million Omani riyals USD during this period. And they were all profitable because of the valuation discipline which we have when we make an investment, and the value we create, and the structures which we use to finally exit out of any investment. We have been actively investing as well, and this was the time to make investment because there was a attractive price, available. We had created a new investment of around $600 million during that period. Healthy cash flows and moderately leveraged at less than 1%. That's very important for us. We invest at the right time, we create value, and we exit at the right time. But to do this, you have to be very disciplined in terms of the cash flow management, and that's one of the key for our success as well. A leading investment company with market capitalization of 0.6 billion, and this is the latest number which we had. If we progress on the next slide, we are a purpose-driven organization. With so many changes happening recently, and the world is evolving so fast, our purpose is the North Star, which basically guides us to remain focused and to do the right things. We looked at, what keeps us all united and what really keeps us, everybody so motivated in doing whatever we do on our daily basis. Our purpose is aligned with our strong belief that business can be a significant catalyst for creating scalable economic, social, and environmental values. It provides clear action for our direction for our daily actions, unites our people together, and guides us towards fulfilling our vision. We looked at it, what are we best in? And we are best in, making the investment decisions in the right company with the right management teams, and then creating value and transforming the businesses in a way that contribute to their growth and excellence, in addition to providing our affiliate companies with the new growth capital. We work closely with them to build their operational and technical expertise. So it's more on providing them access to the capital, helping them in approaching new markets, developing new products, fostering the nature of innovation in our day-to-day activities, and With this, we strongly believe the important role of business in enriching societies. Our investment philosophy underpins that belief. Through our portfolio companies, we provide societies with valuable services and solutions. Through our portfolio companies, we help in creating new jobs, enriching talent, and providing new opportunities, and finally, really looking at the betterment of the communities which we have. On the bottom of the slide, you have our, the values, and basically we all live our values. That's a part of our culture and the fabric. Integrity, collaboration, whatever we do, we always do it on a collaborative basis. It's basically we really collaborate with our partners, we collaborate with the regulators, we collaborate with our investors, and we try to create transactions which are win-win for everybody. Excellence is best in class, innovation, and good citizenship, and we are very proud to have good citizenship as one of our a significant value. Ominvest is led by a progressive board of directors with high quality expertise across diverse areas. The chairman is Khalid Zubair, and if you really look at our board members, everybody brings in a new skill, a new discussion point in the boardroom, and that really helps us in taking the right decision. Our board continues to critically think about the role which the board is currently playing in creating a positive legacy, as well as shaping the future of Ominvest, as well as the communities which we live on. The mindset is progressive, inclusive, purposeful, and very insightful, and the focus is on creating a long-term value. The board guides us and supports the management team to achieve superior and sustainable performance while adhering to the highest professional and ethical standards. Under the direction of the board, we have recently embarked on our ESG journey. We are still in initial stages, but there is a very clear roadmap what we want to do there. We have completed the capacity building exercise within Ominvest as well as our portfolio companies. We have appointed champions amongst all our portfolio companies, as well as we have performed several engagement on ESG. And now we are working on a very clear strategy, how we want to take our ESG initiative as going forward. Moving on, the executive management team leaders with extensive experience, led by Abdulaziz Al-Balushi. He's currently traveling, and that's why I'm making this presentation on his behalf. Everybody who you see on the screen is an expert in his or her area, and collectively it's a great team, and we are proud to be a part of this great team. We really live on our values, and some of the characteristics of our team is dedicated, creative, agile, collaborative character, and culture. So these are some of the very important traits of our management team, and that's also, the team is basically one of the major reasons for our success, and it's basically helping us in our growth journey. I'll take a pause here and really look at what we have achieved in the past before we go into our strategic direction. The company was formed in 1983. The founding chairman and the board members laid the foundation of Ominvest and set a great vision and enduring value to follow. The board was reconstituted during 2012 and 2013, and the management changes were introduced during 2014. And that is the time a new strategic direction was introduced, and that was more on the diversification, and we started our journey on a high quality asset diversification. Then what happened in the following years is 2015 was a transformation year for Ominvest. It was a merger of Ominvest with Onyx Holding, the company of equal sizes, and then both of them operating in investment area with the different type of assets which the companies had. This gave us our diversification in the insurance sector, and our parent company assets during that year increased from 275 million, and it reached to 623 million, and now we are talking about 2.5 billion. So that's the growth which we have achieved over a period of time. We have grown more than double during this period till our last year. 2016, what we did is through the transaction with ONIC, we got National Life, and it became one of our company. A very strong management team, but the company required capital support and a strategic direction, and that's what we did during 2016. We recapitalized National Life to grow regionally, thus achieving market leadership in Oman with significant regional operations. And during this period, National Life has grown many folds. It's because of the management team which we have, but as well as with the efforts and the things which were done by us as Invest. 2017, the new strategic direction also had a focus to operate in our circle of competence. And as a result, we decided to divest non-core industrial businesses which we had. It created value for the shareholders, but also brought a lot of focus on the areas which we really want to grow and spend our energy and effort on that. 2017, we also had successful IPO of National Life General Insurance Company and Al Halia Insurance. Both were part of our portfolio at very attractive valuations. I remember National Life that time was IPO'd at 1.8x price to book value, which was highest in the region. And it was mainly because of the growth story behind National Life. 2018, we optimized our capital structure by issuance of perpetual bonds. It's around $160 million. These are coming up for call next year, and we are gearing up basically to ensure that we make the call in next year. Another event which happened in 27 is National Finance merged with Oryx Leasing, resulting in a market leader. As I mentioned, National Finance now has got 47% market share in the leasing business. We accumulated close to 10% stake in Bank Muscat, the largest bank in Oman, at attractive valuation. And again, that basically demonstrates the valuation discipline which we have when we are making the new investments. And today, the value of Bank Muscat is so different compared to the price at which we were invested. And that's why I think that's also the theme of this session today, to invest in the right time. And I think Oman and as well as Invest provides a lot of promising opportunities. We formed Jibreen Capital as a private equity arm of Invest. It has now got private equity assets in excess of very close to $300 million. 2019, 2018, we expanded into Asian markets for our private equity business. We did an acquisition of a GP stake in a company called Eastbridge in Singapore, an established office in Singapore. Our private equity assets, as mentioned, is around $270 million. Then we had COVID, lockdown, and things become much more slower. But within Invest, under the strategic direction from the board and the management team, we had started working on certain transactions much before we had the COVID thing coming up. What we did during that time is actually we delivered on the strategy which was established earlier, and the major events which happened in 2020. And I remember we were working on this transaction and we had all the lockdowns. Many things were closed, but we were successful in doing the transaction. It was the completion of Ali's Islamic Bank acquisition by Oman Arab Bank, and then basically both the banks merged, which resulted into one bank becoming a conventional bank and the other one becoming an Islamic bank. So we had two banks through Oman Arab Bank. We divested a partial stake in Oman Arab Bank at attractive valuation. I'll not repeat that because Badr, my colleague, has earlier touched this in his speech. And there was successful listing of Oman Arab Bank. 2020, we sold a portion of treasury shares at attractive valuation and enhanced liquidity, which really helped us to fuel our growth. We acquired control over U Capital, which in turn acquired Gulf Badr Capital Markets. One of our portfolio company is called International General Insurance. It earlier used to operate from DIFC. During 2020, it got listed in NASDAQ US and mainly through a SPAC transaction. A very solid company, and we did a partial exit of that at that time at 2x value. We invested in schools. That investment was around close to $50 million. with attractive guaranteed IRR and yields. Today, within our portfolio, we have around 9 schools, ownership interest in 9 schools with 12,000 students. So, again, that's a platform which we are working on. 2021, we issued perpetual sukuks amounting to 135 million by conversion of the treasury shares. These treasury shares were non-revenue generative for us. So basically, it has unlocked a lot of value for us and give us access to the cash for us to make new investments. We established office in DIFC. We launched a global capital market program to grow and diversify. Our assets under this platform currently are around $330 million. Expansion into logistics sector in US and in Europe through Jibrin Capital, and we made more investments in school and real estate projects during that time. 2022 is still a couple of months to go, and we are very active and busy in the deals which we are currently working on. What we have achieved so far is our flagship insurance company, National Life, completed a 100% acquisition of RSA Middle East with an aspiration to become a leading multi-line insurer in the region, and I'll explain more this during the presentation as we progress. We increased our shareholding in Takaful to 56% and gained control. We are working on creating a technology platform, and one of the first acquisition in a niche technology company was completed by us during 2022, and we are looking at certain more investments as we speak. Now let's briefly look at our business verticals, how we do our business and our strategic direction. We have 3 business verticals, and they are the engine of Ominvest growth and revenues. We have a very clear defined investment policy, and we stick to it. It keeps on evolving as and when there are changes, but we follow a strong discipline on that. The 3 verticals which we have is the strategic business. Strategic business I'll explain in a minute, and then we have global capital markets, private investment banking, and private equity. The key themes of our investments are valuation discipline. I think that's something we never lose focus of. We never lose sight of this. High quality, durable assets, even the private equity platform which we have, the quality of assets which we have, and the sectors which we focus on are defensive. A diverse and balanced portfolio, which again, it gives us sustainability. It gives us access to the cash flows on a regular basis. We create exits on a timely basis. But at the same time, we take all the opportunistic opportunities coming to us as well. Avoid taking excessive leverage. That's very important to run a successful investment model. But you have to make your capital work. Maintain high level of liquidity. And again, the listed companies which we have in our portfolio also provides us an access to liquidity in case if we require any time. Adoption of unique structures. In the last slide, I talked about so many mergers and acquisition, and we have a 100% success rate in completing mergers and transactions, and we have done more than 5 in the last 5 years. Agility and out-of-box thinking and scalable platforms. So whatever we are doing now, we want to replicate in other places. So that's, again, a very important component. Strategic business, we are long-term value investors when it comes to this portfolio, focusing on capital protection and superior returns. Maintain stability of earnings and cash dividend. That's very important. It's the cornerstone between our portfolio companies as well as other 2 business verticals which we have. The objective which we are working on is to grow our portfolio companies to become regional and international player. And I'll briefly talk about the National Life recent transaction and merger with RSA. I think that's a one step about this particular objective. We are establishing an insurance group by creating a valuable multi-location insurance business from Oman. Asset optimization with clear emphasis on returns and yields, and establishing a technology platform to create value and prepare our portfolio companies for the future. So these are the objectives. We are at different stage at different objective, but everything is progressing very well and going in the right direction. The other verticals are investment banking and private equity. Again, it basically brings more diversification to our portfolio, brings in new sources of revenue, which is in the nature of fee income, focusing on making short to medium-term private equity and venture capital investments regionally and internationally, and create valuable platforms by building AUMs. The portfolio company which we have under our private equity and investment banking platform in Singapore and Oman, the assets under management are close to $2 billion. Global capital market investments is a further diversification and growth in international markets, build high quality investment portfolio within our as a proprietary portfolio, which also are very liquid in publicly listed stocks, and enhanced OMA Invest profits, cash flows, and overall liquidity position. With whatever I have explained so far, I think this slide talks about the diversification which we have achieved in the last, since 2014. And basically this is a journey which continues to evolve, as we speak. The first one gives a diversification. On the first half of the slide, you can see the sector diversification. If you see on the left side, in 2014, 97% of our assets were in banking sector, and we just had 3% as other assets. And on the right side, if you see, it's the sector diversification by 30th June 2022, and the insurance assets are 32%, banks are 31%, global capital markets 16%, private equity and investment banking 11%, finance and leasing as 4%, and then so on and so forth are the different sectors which we are working on. So that's mainly on the sector diversification. If you look at the second half of the slide is the geographical diversification which we have achieved. And again, as I mentioned, it's a journey which we are continue to work on. 2014, all our 100% of the portfolio was local. If we look at now, we have got 33% of our portfolio is international, is regional, and this is prior to we completing the transaction of RSA. It's not like that we are not investing locally. We have invested heavily locally, and that is one of the main reason of our success. But now the portfolio is more balanced between the local and international investments. I'll talk about some of our select portfolio companies, and then I'll talk about our 2022 key transactions. We aspire to be an eminent investment group in the MENA region with significant global reach and impact. If you look at on the left side, our insurance portfolio, we have got 4 insurance companies currently, and they are becoming a part of our platform. The flagship company is National Life and General Insurance, largest insurance company in Oman, presence in UAE, in Kuwait. It just completed its acquisition of RSA Middle East offices. It's a 100% acquisition, and thereafter it's a merger of the 2 entities. RSA is a leading P&C insurer in MENA, presence in Bahrain, KSA, UAE, and Oman. So it provides us access to the new market, new products. Al Halia Insurance, as OMA Invest, we have a direct 24% interest. We have a 14% interest in IGI, a leading reinsurer and insurance company focusing on specialty lines. And then we have a 54% stake in Takaful Oman. On the banking side, 32% is we have a 32% stake in Oman Arab Bank, which owns Alis, 100% stake. We have 10% stake in Bank Muscat. We have around 9% in Ahli Bank. On the leasing side is the National Finance, largest leasing company in Oman. We have got 35%. We also have an interest in a leasing company in Bahrain. It's called National Finance House. We have got 18% stake in that. On education, there is an ownership interest ranging between 15 to 40%. As I mentioned, now we have interest in 9 schools, and collectively it's a student strength of around 12,000. Private equity and investment banking, a very focused area for us. Jibreen Capital is the largest private equity firm, one of the largest private equity firm. We have 43% stake in Eastbridge, which I explained as a GP stake in that, a company operating through Singapore. Assets under management of around 800 million. We did this acquisition a couple of years before, and the assets under management that time were less than 200 million. So good growth story there. U Capital, largest non-banking investment firm in Oman. We have got a 66% stake in that. And then the co-investments which we have done through our GP platform are in companies in Korea and Vietnam called Happy Call, Pops, and a healthcare company in Vietnam. Apart from that, we have also invested in US logistic real assets, which have been rented to FedEx and Amazon. And our DIFC platform is basically, takes care of our proprietary global capital portfolio of around in excess of $300 million. So just to give you an overall summary of who we are, these are the companies where we have larger stakes, and just to focus on, dominant player in the Oman financial sector, 10% stake in Bank Muscat. It will be covered separately today. But again, from our perspective, a very strong bank, largest bank in Oman, total assets in excess of 34 billion, significant government ownership. It's very close as proxy to Oman economy. Solid capital adequacy ratio of 20.5%, capitalization of 5.9, and the bank has very recently proposed a special dividend of $1 million, which is subject to the regulatory approvals. But again, a very, very smart move by the management team there. It's optimized the capital structure as well as rewarding the shareholders. If you look at Oman Arab Bank, it's one of the leading bank in Oman, fully owns Islamic Bank, which is a fully Sharia compliant Islamic bank, where they have got Oman Arab Bank has 100% economic interest. Total assets of 9.1 billion, and the company got listed in 2020. National Finance has got total assets of 1.1 billion and the market share of around 47%. Equity base of close to 300 million, and it's the second largest lender to SME sector in Oman. I think again, that's basically goes back to our vision and our purpose, of transforming businesses to enrich societies. Ahli Bank, fastest growing Omani bank with the strong product and services, total assets of 8 billion, and it's part of Ahli United Bank. They have got 35% stake in that. In Oman Arab Bank Jordan has got a 49% economic interest in that. If we move on, a range of strategic investment within our insurance platform. The first one is our flagship company, National Life and Insurance. It comprises of 6 major companies, National Life, RSA Middle East, Al Halia Insurance, Al Alamiya for Cooperative Insurance Company. It's a listed company in Saudi Arabia. National Life Support Company in India, and we also have got a fully owned interest in a third-party claim processing company, a TPA called Inaya. Within these companies, there is a collective experience of over 80 years in the Middle East, and it offers a broad suite of digitally enabled, customizable solutions across all lines of insurance. Total assets of National Life are $1.3 billion, and the latest market capitalization is around $350 million. If you look at IGI, International Specialty Insurance and Reinsurance player, and this company got listed, I think just we had the introduction of COVID and the lockdowns. We worked very closely with the management team there. It got listed in NASDAQ in US, a headquarter in Jordan with presence in London, Dubai, Malta, Casablanca, and Kuala Lumpur. They do main of their operations are mainly outside the region in Europe and US. Latest market capitalization of $380 million, and then I briefly touched on Takaful. We have got an economic interest of, controlling interest of 56% in Takaful. What has kept us busy during 2022? I think one of the landmark transaction for us during this year was National Life acquired RSA Middle East, building a leading multi-line insurance group in the region. We have signed certain agreements with the objective to increase the footprint of our insurance company within the region. These agreements were signed in last year, but during July 2022, National Life has completed the strategic transaction, which has resulted in RSA Middle East becoming its wholly owned subsidiary and making the combined entity a leading multi-line insurer in the region. The transaction was executed in 2 parts, and both the parts were executed simultaneously. The first one was a 50% interest, which National Life acquired from RSA, and that the RSA as a partner, they exited the region, and that was paid in cash. And the remaining 50% is owned in RSA, was owned by 4 reputed Saudi shareholders, and they exchanged their shares in RSA Middle East platform, and they took new shares in National Life. So basically, National Life issued new shares in summary to these four reputable Saudi shareholders, and they became the second largest shareholder group in National Life after Ominvest. On a macroeconomic level, this also brings foreign direct investment to Oman-based National Life, which aligns with our national economic development objectives. And again, this is very much the theme of MSX Roadshow for today. The transaction has created a diversified multi-line insurance brand across the GCC, supported by a diverse set of shareholders in Oman and Saudi Arabia, wider scale, and best-in-class standards. Even after completing the transaction, we remain the leading shareholder in National Life, and we continue to maintain the controlling stake in the company. The other transactions, we acquired controlling stake in Takaful Oman by subscribing to the right issues, taking our shareholding to 56.2%. Another important milestone transaction for us for this year was optimizing our capital structure by issuing perpetual shares, and we acquired a controlling stake in the niche tech company, and we have a strong pipeline of transactions for second half of 2022. So just to briefly give you an overview of what we have done during the current year and the areas we are working on. Apart from these transactions, there has been a lot of activity in global equity, global capital markets platform, as well as on the private equity side. Some of the performance indicators and our journey so far. If you see, that's the consistently profitable in spite of the market volatility. Last 20 years, CAGR is close to 14%, and we are well positioned to close 2022 on a strong note. Dividend per share, if you look at from 2015 to 2021, from 10% it has gone up to 30%. If you see the dividend payout, again, it has been consistent, and the dividend payout last year was around 52 million. So it's been a consistent track record of Ominvest and its group of companies. Cash is king. Comfortable liquidity position, it's very important for our business model. We'll just provide you some insight on the banking limits which we have and how we manage our cash. The banking limits, we have utilized around 83%. We have 17% of the banking limits available to us, but apart from that, we have already executed several term sheets, to enhance the liquidity position of the company. If you look at the borrowing profile, 87% of our borrowing is long-term, very well matched with our cash flows. We only have got 13%, which are short-term lending. Currency profile, 77% is in the local currency, 23% is in USD, and USD borrowing is naturally hedged with the dollar assets which we have within our portfolio. At the bottom of the slide, you can see the repayment of the loan installment, which are spread very well across the 7 years, comfortable liquidity position. Repayment in next 12 months, if you look at from the long-term loans, it's just 13%, and we have enough liquidity. Very active treasury management, following prudent policy, robust liquidity position. We have obtained term sheets. Debt to equity is prudent. It's currently at less than 1%, and it can be very easily enhanced to 1.5% to take advantage of the market conditions, as well as to carefully boost our performance, and very well controlled average borrowing cost. So this is just in a summary. We wanted to provide an overview of who we are as Ominvest. Our teams are here today and tomorrow. On the next slide, I will show you the contact details and the email addresses, as well as there is a barcode. I'll request people who wanted to meet us to scan the Zoom code, and we will be available to have a one-to-one discussion, and looking forward to engaging with anybody who's interested in discussing with us. So that's briefly on Ominvest. I think in the interest of time, we'll have more one-to-one sessions with the investors to explore any business opportunities which we have. Thank you very much, and have a good day.
Thank you, Mr. Sanjay Kawatra, COO of Invest, our main sponsor today. Your time is highly appreciated, and so is the support of Invest. Our next speaker today is Sheikh Talal bin Saeed Al Ma'mari, CEO of Omantel, whom are our technology sponsor. Please give him a warm welcome to the stage. Also, it would be highly appreciated for speakers to note that their allocated 45 minutes includes Q&A sessions. Just a reminder so that we can refrain from keeping everyone past the conference time. Thank you.
Thank you, Hawra. Assalamu alaikum wa rahmatullah. Your Excellency, ladies and gentlemen, delighted to be presenting before you the Omantel Group. Before I begin, I would like to thank Haytham and his team for organizing this event. It's definitely an important addition to our agenda. We've always have an engaging investor relation activities both here in Oman and outside. I would like to welcome also investors from within the GCC and abroad. I hope you find Oman an opportunity as well as like our colleague earlier, Aisha, said, also enjoyable. So Omantel basically is an incumbent telecom operator listed in 2005 in the Muscat exchange. Since then, we've had a journey of diversification and transformation across the telecom and technology space. Omantel today is a leading telecom regional telecom operator operating across 9 markets among the global, one of the global ever-growing regions of the Middle East. So we have a portfolio that is, I have to say, split between growing markets such as KSA, Iraq, and Sudan, and more stable markets such as Oman, Kuwait, and Jordan. Delivering shareholder value is one of the key aspects that we focus on. Over the last 3 years, we have delivered a growing market valuation, over 54% over the last 3 years. On yearly basis, the company have been able to deliver 16% return to its shareholders, a dividend yield on average of 6%. Our dividend policy, as announced by the group, the Zain Group, is a continuous 33 fils for the next 3 years. Now, very resilient operation. As we all know, telecom is space is always challenging, dynamic, specifically relating to continuous CapEx investment. Over the last 3 years, on CGR basis, 3.5% growth on our revenue. EBITDA has been growing by 3.4% and net profit by 5%. During the first half of this year, we are finally back to the revenue growth curve beyond an exceptional 2019, I have to say, due to the consolidation of KSA. We are very happy at this growth rate, specifically at a time where we see a very competitive landscape, both here domestically and abroad. $6.5 billion of revenue during the first half of the year, 2.5 billion of revenues and of EBITDA rather, and approximately 660 million of net profit. Obviously, the company rating has been improved to BB by Fitch just recently. The diversification here of the portfolio within the geography is basically have moved Omantel from a single market entity operating in one country to an operation over 9 countries. As you can see, our cash generation is driven across many geographies. Leading geographies are obviously operation in KSA, Kuwait, and Oman, but there is a very healthy contribution from the rest of the portfolio. Cash and cash resilient is also part of the focus areas of Omantel, although I'm not sure that cash is king. We try to invest as much as we can back into our business. Approximately our capex to revenue ratio is 16%, with evolving technologies, specifically relating to 5G, will continue to perform based on that guidance. Specifically on the net debt to EBITDA, it has increased just recently because of an accounting treatment relating to the recent issuance of Ariyat fund, which will be IPO'd in MSX in the fourth quarter of this year, inshallah. We expect the net debt to EBITDA to come back to 3, and our forward guidance is between, in the next 3 years, between 2.6 to 2.8. Healthy cash flow generation during the first half of the year of approximately $500 million US dollar, close to. In Oman, we are the market leader in terms of revenue market share. In mobile specifically, we have a 59% revenue market share, and fixed 80% revenue market share. The market has obviously technology and population coverage of across all technologies. We just have introduced 5G, not just introduced, but it seems to be very soon. But since late 2019, we have a 32% population coverage of 5G. And as far as home broadband and fixed services, we have a 90% population coverage in terms of households. Of course, a leading position in other markets as well, including Kuwait, where we have a 39% revenue market share, in Iraq of 44% market share, Jordan 48% market share, and 60% in Sudan. Obviously, the population coverage is almost at a 99% average, except in Sudan, where we see a lot of growth on both 4G and 5G technologies going forward. One of the stories that we are extremely proud of, and maybe it's a part of business that is not totally understood by some of the investors, is wholesale. Wholesale is traditionally a carrier-to-carrier business. Over the last 5 years, we have been investing in this area. It represents today 22% of our top line, and we have invested over close to $1 billion US dollar. Some of these statistics here are extremely important, not only for the domestic market, but for example, today 80% of the internet is served locally. What that means is that every time that you click on your smartphone a YouTube icon, it's most likely is delivered to you from our data centers by Google, who has the largest infrastructure in the region in Oman. Google serves today not only Oman, but GCC and plus GCC plus Iraq, Pakistan, and Yemen. Some of the content providers here that include Microsoft, Amazon, and other, and Akamai, the Apple service content aggregator, they serve the wider region through Oman. This has been established through an investment in 21 cables. 16 of these cables are landing within Oman, over 5 landing stations from all the way to Khasab, all the way to Salalah. We have basically recently also announced some initiatives relating to establishing a major landing station in Salalah. We are proudly the only Middle East operator with a regional operator with a landing station that is in Europe. We are very proud of this story, and I think it is consistent with the initiatives that are done by other sectors such as logistics, etc. This is about infrastructure. Build it, they will come. The position of Oman is a great position. Obviously, we are surrounded by a growing markets and population. And like I said, these investments over the last 5 to 7 years have fetched a lot of value, attracting many of the big names in the industry here. And like I said, not only serving Oman, they are serving the region. And therefore, we are the gateway for GCC and beyond when it comes to wholesale business. Our strategy, both in Omantel as well as in the Zain group, Shift Gear and Foresight in Zain, stands on pillars, 5 main pillars. One is digital, and by that, obviously, we are leveraging on companies that have been built on a DNA, basically, of protecting data, highly regulated organization, but never thought beyond the use of active subs and data to monetize and deliver high value high quality customer services, and also delivering solutions. So one of the main pillars is digital. And digital here, like I said, it's digitizing within, modernizing our own network towards network virtualization, network cloudification as far as the telecom infrastructure is concerned, as well as using and leveraging data as much as possible. We see many opportunities in fintech, no competition to any of the banks that are here, but we believe that there are niche areas of leveraging in this area, and depending on the regulation of each market, we have come up with a number of initiatives. Tamam in KSA, Zain Cash in Jordan, Zain Cash in Iraq, and we established the group Zain Fintech organization that is going to consolidate all of these initiatives put together. ICT is also one of the areas that we are leveraging based on the reach and the market share that we have and the trust of our brand with many of enterprises, both domestically and beyond. We are basically an aid both for Vision 2040 when it comes to digital transformation. So we're building capabilities as much as possible in these fields. Excellence, obviously, in a very, if you will, sector that has been dynamic throughout the time, but has also been very much focused due to regulation and history on specifically telecom. Like I said, it was very important for us to invest in people. So culture and talents are key for the success of our strategies. Therefore, we aspire to attract the best talents within the market and also retain. Transform the minds and spirits based on sprint culture that we are adapting at this point of time, but it is very, very key for us in the change culture. More than that is the portfolio optimization. Now, to enhance our innovation culture. It was very important to adapt a different mindset when it comes to also looking at ideas out there. And therefore, we established incubators and accelerators within both Amantel. Amantel Labs have been launched now for the last 12 months. And Zain Startups is a 100 million startup fund that is also incubating many of these ideas. We believe through these pillars, we will be able to transform the business beyond the connectivity into a more 4IR future-proof businesses. Unlocking value over the last 12 months, we have announced a number of initiatives that are part of removing anything that is non-core from our portfolio. So tower deal that you've heard here in Amman, in KSA, Kuwait, Iraq, and Jordan are basically part of these initiatives. So far, we are unlocking approximately 1.6 billion US dollar of value. And we have an ambition to continue with Zain Bahrain, Zain Iraq, and Zain Sudan, establishing one of the largest tower companies in the region. Over the journey of both Amantel and Zain, we have invested in many companies that complement the ecosystem of ICT. Some of the highlights is the Amman Data Park in Amman, which was initially started as a data center company. Today, it's a SaaS company that's delivering many cloud services, targeting the domestic market of Amman. Equinix, a joint venture with the Equinix, the largest rather data center company of the globe, who established their data center in a 50-50 joint venture here in Barca, one of the highest growing data centers in their portfolio. We just announced another Equinix data center in Salalah, and it's part of, like I said, moving towards Salalah, one of the global and regional hubs that will serve not only the Middle East, but rather targeting the Horn of Africa and East African areas. Zain Tech was one of the, again, initiatives that we have started to consolidate our B2B offering, targeting multinationals and regional organizations. Obviously, some of these initiatives you've heard of is the SEC solution. This is something with a different flavor, but focus on B2B, multinationals, like I said, serving regionally with a local flavor. The portfolio obviously include blockchain, some MVNOs, and fintech startups. ESG is a journey, and it's part of the commitment of Amantel towards environment as well as society. We are proud of some of these initiatives, although we believe this is a journey that is continuous, as continuing the sustainability of our business. Over the environment, we are very proud that we have been able to decline the emission reduction is approximately in Amman 16% over the last, since 2017, Iraq 34%, and South Sudan 46%. 835 kilowatt of solar is being produced here in Amman, and we'll continue to do that. We are embedding the United Nations Sustainability Initiatives targets as part of our CGR, and these are also a commitment that are made by the group, and like I said, a journey that is sustainable and growing as we continue our growth story. This is the famous disclaimer, which I'm putting here back at the end. I hope we have complied to the regulation of CMA. If not, I'm sitting next to Sheikh Abdullah and I'll take care of it. And basically, our IR team is here for any one-to-one meetings or one-to-many meetings. I'll be here until hopefully another 2 hours. I'll be ready for any questions that you might have. If you have any burning question right now, I'm ready to answer as well. There are two reasons why we are undertaking that transaction. As you know, today, to simplify networks, you have passive infrastructure such as these steel structures and other components, obviously, that are not active components. And there are active components that are obviously regulated. Now, the tower divestment is basically meant to establish two things. One, deleverage, and therefore manage some of the debt portfolio that we have, as well as invest part of that in the growing domains in the business, not traditional domains of the business. Anything that is relating to fintech initiative, anything that is relating to blockchain, the 4IR, famous 4IR, part of that return will be invested in these fields, basically, and domains. Further. Salam.
Starlink. I'll repeat my question. The contingency plan or strategies that companies like Omantel or yourself has against technologies like Starlink, for example, which is a satellite internet
there is no contingency per se. Technology will evolve and will continue to evolve. And the business model of a business like Starlink is totally different than the business model of a traditional operator. And I believe both will coexist because their target segment is complete. I don't see that as a threat. Indeed, SpaceX is one of the clients of Omantel Wholesale, and they have their regional hub here in Oman, and we are proud to be a partner of SpaceX. Zain portfolio includes SpaceX as an investment. There is no threat so far from that business. It's a social media, if you will, hype at this point of time. We believe we are close to the customer and we can deliver services and customer experience that are beyond what can be delivered by satellite. Just for your information, today the fiber delivers 98% of connectivity across the globe. Low orbit satellites is a disruptor, but not on to fiber. It's a disruptor to satellite. And we believe it will target different set of customers. Today, it's $100 plans, plus a dish that you will have to acquire for approximately $800 or $1,000. That's not exactly a consumer plan. Plus, there are going to be challenges as well. We believe we are closer. We don't see it as a threat. They are a customer of Omantel as well, as we speak.
And do you see it as a space that you would probably invest in the future, or at least in the technology?
Like I said, Zain is investing directly in SpaceX. I believe OIA have announced that they are investing. Omantel directly is not an investor.
Thank you.
Thank you. Okay, it's lunchtime. Thank you so much.
Thank you so much, Sheikh Talal Saeed Al-Ma'mari, CEO of Oman Tel. I think that was a really cool presentation. I did not know Oman was involved with SpaceX, so it's good to know that. Our next speaker is Sheikh Walid Khamis Al-Hashar, CEO of Bank Muscat, whom are a strategic sponsor of this event. Please welcome him to the stage.
Assalamu alaikum wa rahmatullahi wa barakatuh. Good afternoon, everybody. Bismillah ar-Rahman ar-Rahim. First, I think it's very important to extend sincere and great thanks to MSX for organizing this event. It's truly important to get together and discuss some of our companies. Equally important also to hear from different parties such as OIA and the Ministry of Finance, Capital Market Authority, MSX in itself, in terms of their plans as well, and bring it all within one context, within one room, so that we all talk about our plans and in an objective to promote direct investment in Oman, inshallah, and the growth in all of these sectors and the stock market in Oman. I think what I will be taking you through today, first I must state, this morning, the first part of the morning, we had diversification in terms of gender. Now, the second part of the morning, we have diversification in terms of style of presentation. So my style of presentation is here compared to my previous colleagues who are moving, just to give you a little bit of a different flavor. Our first slide, the famous slide, and it's not coming, and the green button is not working. The green is the bigger green, is it? There it is, yes. So this is our first slide. I think it was given justice by Sanjay very well. We do have to state our disclaimers in terms of any forward-looking statements and so on and so forth. So, but that's okay. We are all here, good friends and good colleagues, and we all know the different aspects this has to entail. The second piece is the contents of what I will be talking about. Of course, it's very important to bring in the operating environment that we work in as Bank Muscat. This has been covered quite extensively in the first half of the morning and diligently and ably, I must say. But I will cover it just briefly to bring in some context. I will then move on to talk about the banking sector in particular, and then some of the different financial highlights within the banking sector. I will then just move into the Bank Muscat strategy and our business lines and how we look at it, key financial highlights, and go through the different ratios that we have for Bank Muscat. And finally, I will end it very briefly talking about our proposed bank's capital optimization structure. In terms of the operating environment, of course, it's very important to state that Oman's economy has been quite resilient over the past 5 years. And I dare say it's even beyond the last 5 years, because the lower oil prices were there since 2016, in fact. Notwithstanding that, Oman's economy has continued to be resilient, and because of a number of different measures that were taken by the government to support and diversify the economy, Vision 2040, the financial discipline, and the sustainability measures through Tawazun, focusing on a number of different initiatives that we have already talked about, like manufacturing, tourism, logistics, agriculture, and fisheries, are also continuing to be reinforced in Vision 2040. Of course, there are a number of initiatives that were taken by the government in order to enable these different sectors, and especially changing and introducing new legislation, promoting foreign direct investment in the country. What has helped us tremendously, especially in the last couple of years, are the rebound in oil prices. And of course, that has helped Oman's growth prospect and is going to continue to help, hopefully, Oman's growth prospects for the future. The medium-term fiscal plan and Oman's Vision 2040, like I said, does provide a firm and a positive anchor in this direction. Budget 2022 is seen as a growth and a positive and an expansionary budget. It's clearly focusing on large investment layouts, as has been discussed, covering a number of different projects in different sectors across the economy, expanding public and private partnership projects. These are key focus areas for Vision 2040 and as proposed in the government's budget. Oil prices at the elevated levels, of course, against the earlier expected fiscal deficit. The government is now likely to be generating quite a healthy surplus due to the stronger growth in oil and gas revenues. Quarters 3 and 4 of 2022 will hopefully see further increase in the prevailing positive business momentum. Expected GDP growth for 2022 is about 5% year on year. In terms of the banking sector, I think it's very important to highlight that the banking sector performed relatively well during these challenging times of the past few years. In fact, some of the growth parameters which I'm going to be sharing with you in the next few slides, several performance have shown resilience in the last few years. There were a number of support measures that were taken by the Central Bank of Oman and the government of Oman to support the industry and therefore also the banks. The banks have been quite active in terms of supporting different business segments through strong credit support, through realigning cash flows, especially during the last 2 years when the difficulties we have witnessed due to the pandemic and due to the slower economy, realigning cash flows of borrowers, working with borrowers to restructure their debts and understanding more what sort of support that they do need. The sector's key parameters are quite healthy, like liquidity, capital adequacy, and asset qualities are relatively at robust and healthy levels. During 2020, of course, we have to address the elephant in the room for the banking sector. During 2020, there has been a significant drop in the bottom lines of all the banks in Oman, and not only the banks in Oman, but globally overall. And of course, ECL provisions were higher during that year and continued for some of us also in 2021 in anticipation of what the situation could be bringing because of the high uncertainty levels that were there in 2020 and 2021. So banks were prudent in taking higher level provisions at the expense of bottom line growth. The sector has seen some growth in terms of balance sheet along with some steady profits. Banking credit portfolio increased by about 4.5%. And I will show some of those graphs in the coming slide. In terms of this year, between January to April, all in terms of the entire banking sector growth, about 400 million riyals. As discussed earlier, I think in terms of the budget 2022, promoting significant and expansionary investment in key areas of the economy, given the elevated levels of oil prices, lifting up of the pandemic-related restrictions, and the government's serious focus in terms of reforms and developmental strategies, we expect that this is definitely going to give a solid boost for the banking sector in the balance of the year and the coming years to actually continue to grow. It's going to be quite competitive for sure, but there is the foundation is there that we have come out of this very difficult time. Now is the time to be looking with optimism for the future. In terms of also what are some positives for the banking sector, in terms of the ratios that it has and the business opportunities that it has, the the public-private partnership initiatives that I have talked about in terms of the health sector, education, fisheries, logistics, transportation, and tourism. These are all areas that we continue to focus on in banks and in terms of supporting the government's initiatives and especially Vision 2040. Some of the slides, I'll just take you very briefly through them. We've seen a steady growth in terms of assets, compounded annual growth over between 17 and 22 over the last 5 years of about 5% from 31.5 billion riyals in 2017, reaching to about 38.7 billion for the banking sector. In terms of loan growth, similar trajectory. Also quite steady growth, compounded annual growth of about 4%, and from 23.5 billion to about 28.3 billion. Of course, you would notice that in the middle, between 2020, the annual growth in itself has dropped, and that's understandable given the economic scenario and the pandemic situation that was happening at that time. Deposit growth has also, on a compounded annual basis, similar levels at 4.4%. Profit growth between 2017, it's at 3 to now, is about 3.1% compounded annual growth. But as you see, we're still trying to reach 2019 levels, despite the higher percentages that have been shown in terms of growth between 21 and 20 and 22 and 21. We're still trying to reach the 2019 levels, but it's steadily going into that direction. In terms, now I will move on, having talked about the banking sector, I will move on to the bank's vision and strategic pillars. It's very important for us, and this is a vision that we firmly and wholeheartedly believe in. We live it, and we have to live it, and we believe in it in terms of our culture to serve you better every day. We have to be leaders in everything that we do, and we have to do it in a simple and an integrated way. Our positioning, customer convenience is at the core, high service, quality, customer centricity. It's a very important piece in terms of our strategy. Our strategy rides on 4 key pillars. Customer centricity, supported by agility and innovation to support us to bring in the right technology solutions for our customers and to also help us in achieving the right level of efficiency and through that achieving a market leadership. We have the largest branch network in the country to achieve this, and we will continue to build on our infrastructure. In terms of our financial performance, which I will be sharing with you shortly, quite a robust financial performance, as well as strong capital adequacy and liquidity. And this all hinges and rests on our human capital, which we continuously and very diligently invest in. We have quite a talented and young workforce that is one of core pillars that supports us in delivering our strategy. In terms of our business lines, quite diversified. Our corporate banking business, it's a leading corporate banking business with about 7,000 customers. It has about 32% of our asset contribution and contributes about 24% of our profitability. Our retail franchise is also a leading retail franchise with about 2 million customers. It represents about 29% of our assets, but also represents about 35% of our profitability. Our wholesale banking, which is treasury, corporate finance, investment banking, and financial institutions, represent about 25% of our assets, but also represents 33% of our profit. Mithaq, our Islamic banking window, represents about 13% of our total assets and 6.2% of our profits. Our international operations, having branches in Saudi and Kuwait, and 3 rep offices across Asia, about 1.9% of total assets with about 1.4% of total profits. If I direct you to please see the right top corner pie, you would notice that it just represents the fact that the book is quite diversified across a number of different economic sectors. Personal loans account for about 23%, services at 7%, and so on and so forth. Similarly, in terms of deposits, the story is the same. Different deposits, individuals and others at about 40%, private commercial at about 23%, and government at about 30%, and so on. So quite a well-diversified, full franchise, full service bank across different sectors in the economy. Some of the key financial highlights that I will take you through, also with some graphs following this. The bank have continued to weather all of these different challenges. Net profit of about 99 million in the first half, or about 5% of the first half of 21. Net interest in terms of net interest and Islamic financing of about 166 million, which is marginally lower versus the first half, and that's mainly due to the higher interest expense. In terms of other operating income, 81.4 million, 9% versus first half of 21, but this is mainly due to certain higher income that we achieved from sale of investments. In terms of operating expenses, were 102, so it's about 8% higher compared to the first half. And I think I must state here, it's very important to take context of this piece, because in 2020 and 2021, we took conscious decision to moderate and focus on our costs in order to weather and navigate through those difficult times. And now is the time for us to actually come back and reinvest in our infrastructure and reinvest in our technology in support of our strategy. Net impairment of about 28.4 million, which is lower than the first half of 21. And I had discussed this earlier, and given context of this, 20 and 21 were exceptional years for impairment for all the banks, and us not excluded. Whereas now we are moderating that because we have taken adequate and quite conservative impairment in the past 2 years. Net loans, and we will see some of the graphs in the coming stages in terms of what sort of growth we have achieved there. So this is a graph talking about a number of different areas in terms of net interest spread. If we look at it, quite stable at around 4.4%. And 4.5%. Similarly, in terms of costs at 2%. So the bank has been quite stable in its top line, making sure that it remains robust, making sure that it augments it with the right level of liquidity at the right level of price. In terms of the operating income and the cost-to-income ratio, you can see that it's quite a stable book, with interest to fee income of about 70-30, which is quite a healthy percentage for banks. Also, the cost-to-income ratio at about 42%, and quite improving over the years. Again, we're going to see some parts of that actually maybe returning to the 42%, as I had said earlier, but hopefully we are going to augment that with higher top line. In terms of profitability, similarly, as we see here in terms of the return on average equity at 10%, and achieving similar rates, quite stable over the past few years, and similarly in terms of return on assets. In terms of asset quality, quite stable, and that stems from our conservative lending approach as well as our conservative provisioning policy. Our in terms of loan growth and the NPA levels at 3%, and it's averaging around 3%. The slight increase in 2022 is mainly as a result of the drop in assets, as you can see. But that's mainly it. At 3% levels is still quite a healthy level. In terms of provisioning, we have been quite conscious of this and making sure that we take the right levels of provisions. And we will see that we have increased from 2018 from 128% to reach in June 22 156% provisioning levels. Asset qualities in terms of stage 1 and stage 2 and stage 3 are quite clear in the graph, and they are consistent in terms of stage 2. In fact, improving slightly from 27% dropping to about 20% in 2022. Another good story of the bank is the funding and liquidity. It's the funding and liquidity. Also, a stable funding structure represented by about 70% deposits, and the rest coming from equity and institutional borrowing. Of course, over the last 5 years, we've been quite, making sure that our liquid assets remain strong and remain robust. And you can see this in the percentages in the lower left-hand graph at about 22% increasing to 25%. Capital adequacy ratio, one of the highest in not only in the country but also in the region. Increased from about 19% to reach almost 21% levels. Quite a healthy capital adequacy ratio, which is the subject of what I will talk about in the next slides in terms of our capital optimization. But it's very important to make sure that we do have the right level of capital and to support our growth plans and to support the country's growth plans in terms of credit. So quite a healthy picture all around as far as liquidity, funding, and capital adequacy. In terms of the bank's capital optimization structure, it's clear. We have announced it about a month ago, and basically it's one ordinary share for each ordinary share held. And the second one is a bonus bonds, one perpetual bond for every 10 ordinary shares with a coupon rate of about 4.25%. Bond will not have a fixed maturity date. It's a perpetual, but may be callable after 5 years from the date of issuance. It's very important actually to highlight that this has been approved by the board of directors. Of course, it is subject to shareholder approvals and regulatory approvals. But it's really important to highlight that this is intended to optimize the capital structure of the bank. It has been ensured that it's not going to have any impact on the bank's liquidity. It's not going to have any impact on the bank's profitability or total and Tier 1 capital ratios. In addition, we do have room there for our growth plans, for them to be supported even with this capital optimization. We believe it's a good step. It will also it's a positive step for Muscat exchange, and so it's an important area, and hopefully we will succeed in getting the shareholders and regulatory approval. This is what I had wanted to talk to you about today. I will take some questions now, but also there are colleagues of mine who are available, who will be available tomorrow, and meeting different, perspective or different people who are interested in understanding more about the bank. They have scheduled some meetings, but this is the end of my presentation. I'll be happy to take any questions now. تفضل.
Sheikh Walid, thank you for the enriching update. Just out of curiosity, movement of personnel from one industry to another is healthy, and from one bank to another is healthy. We've seen in the market there is a quite outflux from the bank to the industry. Is this a worrisome signal? And
You
how
mean
is
from
the plan?
Bank Muscat?
Yes, from the bank itself to the industry.
This is
And how do you see it as a kind of a movement from the management side?
This is شهادة نعتز فيها يعني that Bank Muscat exports the top talents to the industry in the country, and it's true. I don't mean it sarcastically. Bank Muscat has always been a target for other banks and other companies to poach talent from it, and some of them succeed and some of them don't. This is always going to be a story that happens, and it's not new, by the way. It happened before, and the key thing that we do in order to address this is keep building the pipeline, keep building the talent from within the bank, and making sure that we continue to build and we continue to develop our talent in Oman, as well as not shying away from bringing in new talent and new blood and new perspective to the management team. So it's actually not necessarily bad. It could be an opportunity also and circulating blood across the full sector. Any other question?
Yes, Assalamu alaikum, Sheikh Walid.
عليكم السلام ورحمة الله وبركاته. عبد العزيز تفضل.
حياك الله. Thank you very much for the presentation. It's very
Yeah.
insightful. I want to touch on one specific thing in the market, specifically the banking industry. We've seen quite a few consolidations in the region in the last 4 to 5 years, and now we see a few banks also consolidating here just to strengthen their size and portfolio. What are your thoughts, being a very experienced banker in the country and a prominent banker? And also, what is Bank Muscat's position with this in terms of the mergers that we've seen recently?
This is a natural phenomenon, and it was happening in Oman years ago. And in fact, I remember when there were tax credits given to financial institutions merging. So it's a natural phenomenon that this is always going to happen. It kept happening in the region. It's happening in Oman. It's quite good. It's quite healthy for the banking sector. It produces healthy balance sheets, good for the consumer, good for the regulator. I suppose less institutions to regulate. So it's positive. As far as we are concerned as Bank Muscat, we always look for opportunities. We've never shied away from looking at inorganic growth opportunities. But they have to be done for the right reasons. They have to be done with the right cultural fit, with the right shareholder fit, with the right financial parameters. And if those are there, then comes the other perspective, which is the size of the bank and their ability to become even bigger. So that's also a factor that we have to take into account. And we understand this. But nevertheless, I think opportunities are becoming more. It's the banks are, which is good for the banking sector in Oman. Banks are growing at a faster pace. So even organic growth is supporting them. So I think all in all, it's quite a positive aspect as far as the industry is concerned. And the more it happens, the more it's going to be better for the industry. Indeed, it is lunchtime. Abu Haytham, Allah يعينك.
Thank you, Sheikh Walid Khamis Al-Hashar, CEO of Bank Muscat. Your time and effort is highly appreciated. Your presentation was insightful, and we're happy to learn that the financial sector is recovering post the crisis that was caused by the COVID-19 pandemic. So thank you for assuring us. Also, I'd like to remind our virtual people who are tuned in virtually that they can also participate in this conference. Their questions will be addressed, so don't hesitate to ask any questions. I will ask them on your behalf. Our next speaker is Mr. Ahmed Al Musalmi, CEO of Sahar International Bank, who are a strategic sponsor of this event. Please welcome him to the stage.
Assalamu alaikum. Good afternoon. I think, Abu Faisal, thank you very much for making this just in time. I think we have recovered the time that was wasted during the break. First of all, I want to thank the MSX, Haytham, and the rest of the team for having organized this event for all of us to be here together, especially as we are coming out of COVID. And I want to thank all of you for spending your time here listening to us. I hope we can make your time worth it. This is the coverage of the presentation I have. I will skip some of them because they've already been extensively covered. So there is no point of repeating them again. But most importantly, maybe it will be good to introduce Sohari International. Maybe for some, being a very young bank, we are just 15-year young, dynamic, vibrant, fast-growing, digital-savvy, third largest bank in Oman. So this is Sohari International that has grown so rapidly since its inception to acquire the number 3 position in total assets. The shareholding structure changed quite significantly towards the end of 2017. And you can see we are predominantly owned by government institutions, almost 70%, and then the rest is the private and public institutions. We'll talk more about the financial part. We've got a section on that. But we're serving over 270,000 customers all across Oman, all the segments across the spectrum through our phygital channels, both physical and digital, all across Oman. The key strengths of the bank may be to highlight very few that we observe and have implemented a very strong corporate governance supported with a very robust risk management framework with a strong ownership and sound capitalization, liquidity, and obviously profitability matrices that we are going to see in the financial section. That was just to introduce the bank briefly. The operating environment, I will not touch any of this because the ladies that preceded us in their presentations did a brilliant job. And I want to thank them and congratulate them for what they've done. Actually, they clarified the macro picture for Oman for many of us that this presentation, and in particular this slide, may not be sufficient to add anything more than what they have done. Maybe I could give a different context beyond Oman, just to understand and more importantly to appreciate what Oman has done during the last few years, and in particular how we have progressed with different reforms and economic diversification programs. If you look at the global landscape, the economic landscape is changing and changing rapidly. It is also very uncertain, very complex, very ambiguous, and very volatile to navigate through. And all of these are actually characterized and powered by 3 major forces that we see, and these forces are actually shifting the economics gravity from west to east. We see that happening. And as a result, we see a lot of disruptions. As a result, we see opportunities are coming more from emerging markets, more from emerging economies that will contribute significantly into the GDP growth of the world. So we are sitting in the middle of this. And we have in place a robust plan. We have progressed very well with robust infrastructure and institutional framework. And I think it is a high time for us to seize the opportunities that all of these changes are happening and take Oman to the next level. And all of us here in the room, with the institutions we represent, I think can play a significant role in making that happen. So the Oman banking sector, obviously, Abu Faisal has touched and explained that quite extensively. I don't need to repeat that. But I think the sector also has contributed proactively during the COVID to support a lot of customers. We played an instrumental role, of course, with the support of the regulators, to support a lot of customers, both retail, commercial, and institutional customers that needed support at the time. So we continue to do that, and it demonstrated a lot of resilience during the crisis of our generation. And I think with that, we should continue to invest into this sector because it's a critical part of the overall economic diversification plan. Now, as a bank, we observe very robust governance frameworks, just to give you an idea, with the robust risk management as well. And this is the way we are structured, with different committees in governing the affairs of the bank. Now, this is where I want to spend a little bit of more time, for the time that I have, before I can take your questions. Our business is categorized into three different groups, broad groups: the wholesale banking, the retail banking, and the Islamic banking. The wholesale banking actually consists of corporate, institutional, and as you can see, SMEs and financial institutions, treasury, which we call it global markets within. And it's a very big part of our business within the bank that has 70% of the bank. And then, of course, we have the retail banking that has the typical retail plus the wealth management, and the thriving Islamic banking that also is growing, and growing quite impressively. Now, maybe before I talk about that, I would like to talk about this particular slide. You know, back in 1994, there was a profound visionary statement made by Bill Gates that banking is necessary, but banks are not. This we have witnessed over decades, how that statement, how that visionary statement is actually unfolding in front of our eyes, that our direct competitors as banks are not necessarily ourselves as banks, but beyond banks, because a lot of non-banks organizations are chipping into banking business. And I think it's important to be aware, and because it's a natural force that you cannot fight, you should just embrace that force and see what you can do at that. So these four key aspects of the strategy formulation were critical as we were thinking to plan our way forward. Because in any business, I think it's important to make sure you stay relevant and resilient in everything we do. And given the circumstances and the changes and the fast-changing marketplace, I think it is very important to do that. So with that, we developed the business model. And that business model cut across all of this. So the first we thought is the business of banking. How the business of banking tomorrow will look like. And what does that mean today? And how can we navigate through? With customers, there is a lot to be done as well. But how the customers of tomorrow are going to demand from us as banks, especially when the competitive landscape is going to change and changing rapidly. And the value chains that everybody is playing a very active role in offering services similar to banking. And then, of course, what kind of capabilities as banks we need to put in place to be able to navigate through that competitive landscape that we foresee. That is the kind of thinking we had, and then we defined the vision for ourselves going forward. And that vision is to become a service company. A service company that helps customers, communities, and people to prosper and grow. Now, this vision may sound different, and it is different. It's underpinned with 5 key foundational pillars. First, the purpose, and everyone, I think, before me has talked about the purpose. The purpose is the reason for why we exist in the first place. For us, the purpose of the bank is to, we call it internally, is to help you win. Basically, what we mean by that is to create great experiences, great relationships, enriching lives. And there we feel it connects well with the people we serve. And the promise is to deliver the responsive and responsible services in this ever-changing world. And the principles, there are 3 principles that we observe. The first principle is more velocity. Given what's happening in the market, I think speed, scale, and simplicity are critical. And that's what this first principle means. The second one is more value. Whatever we do should actually connect to the customer's world, should be relevant to the customers. Otherwise, if you are irrelevant, you will not be needed. If you are not needed, you will not be missed if you are not around. And the third one is more vision. The more vision is always being progressive in our thinking. And therefore, understanding the customer's both expressed and latent needs. And this is actually important, especially in the digital age, where all of these changes that are happening, it will not be about size or just speed to survive, but it will be the ability to adapt to all the changes that are happening in the marketplace. Now, to adapt, you need to have that kind of progressive approach as you navigate through all of these changes. The fourth one is the personality. This is very much internal. This is to do with 3 things as well for people that guide us to make all the choices in investments, both in three choices: in people, in systems, and in processes. The personality of being sharp. Sharp is simply to be knowing what everyone is doing within the bank. Everyone needs to know what he's supposed to be doing. He's trained well, he's capable of what he's doing, and he's well equipped with what he needs to serve the customers better, to serve our stakeholders better. The second one is being human. Being human is all about that human touch. Within the digital, see, what technology has done is connecting the world and disconnected people, disconnected humans. So in the digital age, with all that is happening with the digitalization, that human touch is gradually and fundamentally missing. And we are seeing that every day. So we need to maintain that. And if it's part of the overall model, I think it's very powerful. Because at the end of the day, we are human beings. We are social animals. That social aspect needs to be maintained as we do our business. And the last one is being unstoppable. Unstoppable is all to do with the resilience in our business. And with all of these together, they create that experience of being in the game. So it's a very different philosophy that we follow in crafting that vision. Obviously, all of these have got different themes and different initiatives that are under implementation to make them happen, and we can see the results of that. So over time, we've got a very clear vision, very clear values and strategy. We have rewired the structure and design within the organization, set the management rhythm within on how we operate in the context of this. Obviously, built a lot of capabilities in systems, people, and processes. Right, I talked about this. At the moment, we are pursuing these key growth priorities. We are scaling up beyond borders for the first time. We are opening up in Saudi Arabia, inshallah, soon. We are strengthening our capital base. The rights issue is already announced. 160 million will be closing by the end of this month, inshallah. And obviously, solidifying our domestic presence. I think that is important in scaling up our business, and especially given the capabilities that we put in place, I think that will go a long way to create a lot more values and build a lot of relationships and create great experiences and enriching lives, which actually boils down to the very essence of why we exist when I talked about the purpose. And we have appointed the head of ESG, and today morning I was very pleased to see the ladies presenting here. I say, look at what Oman is actually doing. We are already having the ESG implemented, but we just want to put these bits and pieces together and present them to the external stakeholders in particular and showcase how Oman has progressed in all aspects. That will be very important. So we have appointed the head of ESG for us, and we are implementing a lot of policies, procedures, and practices that conform to the international best practices. As we are growing and going beyond borders, I think it's important to have this aspect of the organization delivered. So the bank has progressed over the last 15 years quite well. And in particular, the major changes took in 2017 when the shareholder structure completely changed and the new direction of the bank was completely redefined and the new team was put in place. So we came from inception to stabilization, we worked on the transformation, and now we are working on growth. Obviously, we don't want to talk too much about the accolades and all the awards we have actually been able to achieve over the last couple of years or 3, but this is what has been done for the first half of the year. We have been able to perform quite well, and you can see there the net profit was up by 22%, but more importantly, I think, is on the operating profit. I think that is an important part, which has grown by 13%. And all the ratios, given the history of the bank, I think are on the right track and are pointing on the right direction. We'll continue to do that. So it's not just only the performance indicators we look at we also look at the health indicators. So we keep both of them hand in hand as we navigate through and through this very challenging marketplace. Okay, on earnings and profitability, you may see how we have progressed. Obviously, if you just look at the slides in isolation without having the insight, you'll have a very different interpretation. But if you understand or you have the insight, the profitability, for example, the net interest margin. The net interest margin, if we look back in history, we had a lot of concentration. We had to do a lot of diversification, be it in our income streams, be it in our book, to make sure that we sustain what we achieve. And as you can see, the cost of fund has drastically come down. And that was because of the consistent focus we kept to deploy or mobilize low-cost deposits. And CASA was the major drive right from the beginning of the new transformational journey. And that has grown from about 38% to 63% today of the total 63% of the total deposits. That has helped us a lot to bring down the cost of funds so we can help customers with better pricing. And obviously, as you can see, the return on equity is among the highest in the banking sector, and return on assets continues to be at the level which is within the market median. The asset quality, this has been a major issue that we needed to address and when we started the new journey. Because we believe internally that there is no point of keeping the fish under the table. We better bring it on the table, clean it up, grill it, and enjoy the meal. So we have head-on actually addressed all of those difficult issues and make sure that we pave the way to sustain the growth and profitability going forward while increasing all of the health indicators. On the funding and liquidity, as I've talked to you, you can see how CASA is actually grown up. That has significantly helped us to bring down the cost of fund. We have very robust liquidity buffers. Both LCR and NSFR are actually sitting at the very comfortable position as we speak. Even during the crisis, we were able to achieve that. And the decline we achieved on the loan-to-deposit ratio, that again has been a major improvement to bring down from 124 all the way down to 106. And the 124, once upon a time, was almost 140. So we have done that without necessarily jacking up our cost of fund, which is something extremely difficult. It's like swimming against the waves. It's extremely challenging, but we've been able to do that. Obviously, on capitalization, we continue to beef up our capital buffers. We have sufficient amount of capital to support our growth plans, and we are going to augment that capital with the rights issue and refinancing the perpetual as well, which is out there in the market already. And all together, all of these actually will improve the overall balance sheet quality as we go forward. These are just details of the financials that I've talked about, but I wanted to make sure this is also covered as part of the compliance requirements. And now I will be ready for your questions if you have got any questions. Yes. وعليكم السلام ورحمة.
شكرا للبرزنتيشن اللي عرضت لنا اياه اليوم. سؤالي كان عن ال recent announcement of Sahara International's potential merger مع HSBC. I just want to understand your take on the value add that you see and what's the end goal eventually if this merger actually succeeds?
The end goal is very simple, is to solidify our domestic presence as we are internationalizing our presence. And I think, like what Abu Faisal said, this is just a natural phenomenon. The market, I think, needs this, and this consolidation will add a lot of value, and we have learned that lesson during the pandemic. I think if we have bigger banks in your domestic market, will go a long way to support the economy, even during the most challenging times like the one we have just gone through.
Thank you. Just a follow-up to that, does that not take over the idea of having international banks present as well in Oman? Or how do you?
No,
how do you
actually,
take that?
that's not the case. HSBC made it very clear that they intend to stay here, and they disclosed that in the market. If you follow the news very closely, they are not going to exit the Omani market. They are going to be present.
Very clear. Thank you.
Yes. Any other question? Yes.
Hello. Yeah. So regarding the Bank Nizwa merger, if
Can you
there's
introduce
any...
yourself?
Sorry?
Can you introduce yourself?
My name is Talal Al-Qadi. I work with Tanmiya, Oman
Okay.
National Investment
Yeah.
Development
Yeah.
Company.
Yes.
So I'd just like to know if because we heard about the potential merger with Bank Nizwa initially, but then it kind of went quiet following the HSBC announcement.
Yes.
Also, I'm just trying to understand how it will work from the perspective that Bank Nizwa is a Sharia compliant bank, Bank Suhar being conventional. Would it be something similar to the OAB Bank Al-Izz situation? Thank you.
Okay, I think it's premature to talk about the structure, but are we pursuing that particular transaction? The answer is yes. I think we have disclosed that very clearly in the market, and we'll be keeping the market updated on the progress we make. Any other question? Okay, thank you very much. Oh, you still want to ask? Yeah, Talal.
In terms of the HSBC merger, how soon do you expect the synergies to take effect? How soon do you expect the synergies to take effect following the merger?
Yeah, Khente Gal, you're jumping the gun. Let's go through the process. We just started the process. Let's go through the process, complete the process, and all of those issues will be addressed. ها؟ كيف؟ هنت معليش. We will be updating the market as and when we make progress. As simple as that. Yes, any other question? Thank you very much, and have a great lunch. Thank you.
Thank you, Mr. Ahmed Al-Musalmi, CEO of Sahar International Bank, whom are a strategic sponsor. All the discussion speakers' presentations have been very informative so far, and I think we've all established that they do have two things in common. One is that the banking sector is recovering, thankfully, which is good news, and the disclaimer page either at the start or the end of the presentation. Let's move to the next speakers, whom are Bank Dhafar and whom are a strategic sponsor. We have both the CEO, Mr. Abdul Hakim Al-Ajeli speaking, and Vikesh lunch break? Sorry. We'll resume with the Bank Dhafar speakers right after the lunch break, which will occur now. So you may help yourself. You'll find the lunch right outside the hall.